I like how you whoop, whoop.
What is going on YouTube? It's Brendan from Market Makers. Guys, it's time for our Monday video. Sorry I couldn't get that second video out last week. As you guys know, still dealing with the disaster from the hurricane, but the bulk of the cleanup's done. So this week, there will be 2 videos. That second video on Thursday. Go ahead and like and subscribe if you like this content. When I made my last video last Monday, we had we had the CPI numbers come out, right? And what did the CPI number show? Inflation kicked up. It went from 3.2% to 3.7%. That's your headline CPI. And then the core measures also went up. But we got to take a second because we got to talk about the lunacy of the media and the lunacy of the actual inflation numbers. The UN Food Index is at an all-time high for food. Rice hit a 15-year high. Rice, key staple ingredient across the world, right? Hit a 15-year high. But when you look at inflation, the CPI came in hotter. The core components also came in hotter. And then when you look at the media, how did they deliver that to you? How did the economists from these hedge funds, from these investment funds, from BlackRock, from Vanguard, from Bank of America, Citibank, the dark tetrad, how did they deliver it to you? Well, Bob, inflation came in pretty much as expected. And we're still on a key glide path here to have a potential soft landing next year, which has never been done before in history. Let me explain something to you about inflation, okay? First of all, the Fed doesn't like to use headline. You know why? Because headline inflation has what they call volatile energy and food prices, right? 2 key components you need to live. They don't want to look at what that costs. So they don't look at that, right? So then they look at their core. And then they have the core components, but shelter, which is housing, also went up in the core. So now the Fed, and this is totally made up super core, right? They've been tracking this inflation cycle, super core. You know what that is? That's when you double click on core, you get super core, and you just take housing out of it. So you take food out of it, you take shelter out of it, which is housing, and you take energy out of it. The 3 key components to human civilization. Let's remove that because that's volatile. Now, what's absolutely disgusting and vomitous is that the media just goes along with this, right? The media says, oh, yes, well, the Fed's supercore number actually isn't that bad. It looks like it's in line with what's expected to happen in the marketplace, Bob. Yeah, Karen, I think so too. Guys, it's absolutely criminal what they do because the average person is getting murdered at the pump, murdered in the grocery store. You guys know that I talk about the food prices all the time. It's absolutely insane. And the average American family lives paycheck to paycheck. Roughly between 50% and 66% of people don't have $1,000 saved up for an emergency, okay? So you're living paycheck to paycheck, but what they do is everybody acts like a puppet to the Fed. This is that unholy dark tetrad of the Fed, the media, and then Wall Street, right? It's all a big sales funnel. That's all you are in is a big sales funnel. So they get the experts from these funds that tell you how great everything is in the economy and talk about predicting a soft landing. That Fed itself, on the Fed's website, they have a 75% chance of a recession from the Fed economists. But Powell came out last meeting as well and said, we think the recession fears are largely behind us. So the Fed itself, once again, is not even projecting a recession. The Fed itself, meaning Powell, because he is the head of the Fed. This is all BS. They know there's a recession coming. Guys, the yield curve inversion right now is the strongest, meaning intensity and in duration, going back 60 years. 60 years. That means it's worse than it was in the GFC and .com. It was in the early 80s when we had the dual recessions from Volcker jacking up interest rates. This is the worst that it's been in 60 years. Even Jeff Gundlach went on CNBC, their future summit or whatever, and he said, we're going to have a recession the first half of next year. Do you know why people are coming out with that prediction now? The yield curve inversion. So twos and tens. I've played Michael Darda on here so many times for you guys, so I don't want to play it again. But the twos and tens just hit that sweet spot of 14, 15 months. The average duration of having the yield curve inverted is about 14, 15 months. It can go all the way out to 2 years. The yield curve inverted in the GFC in 2006, right? And the crash didn't happen until almost 2 years after that. Well, the beginning of the crash and the escalation of the crash in September of 2008, bottoming in March 2009. So you have to understand the dynamics of the marketplace, the dynamics of the yield curve, and why they are insistent and shoving this garbage down your throat about a soft landing and it has zero chance of happening, zero. And why they massage the CPI numbers as gas goes up. Our SPR, Strategic Petroleum Reserve, is at a 40-year low. 40-year low. Because why? Because last election cycle for Congress, we had to go ahead, or Biden went ahead and released millions and millions of barrels of oil to bring down the gas prices, because the lemmings in the United States of America, one thing they notice is their gas prices and their food prices. That's why the Fed wants to strip that out. So all you can hear on a loop, on that sales funnel loop, is how great the fight with inflation is. And then you have the lemmings pouring into the market and growth. And so we got to go over the two separate situations that you could possibly have finishing out this last quarter of the year. Very important to look at, okay? Because the markets are choppy right now. The Fed meets Wednesday. Wednesday, I think, at 2 o'clock, they announce if there's a rate hike or not. Let's look. Yeah, it's 2 o'clock. They announce if there's a rate hike or not. And then 2:30 is the Fed Chair Powell press conference. Everybody's expecting a hawkish pause. Okay, that's nothing new. Meaning that they're not supposed to raise rates, but they're going to act like we're still fighting inflation and there may be another rate hike. We're data dependent. That's what the market's expecting. Okay, but let's look at the market. Let's look at the key levels. Let's look at Bitcoin. One of the only things really jacking up and going up. So we're going to look at all these things here in this video, guys. If you like these types of videos, you like my videos in general, go ahead and like and subscribe to the channel. Consider checking out our Discord if you want to trade these markets. If you like the TA, if you're looking for a great platform to trade on, check out SimpleFX. The link is in the video description. With our link, you get up to a $5,000 instant deposit bonus based on your first deposit, and it goes right into your margin. You don't have to earn it to trade with, right? Check that link out. Instructions are there. BingX, if you want to trade all the cryptos, our link also is there, and you can message Lee in the Telegram in the video description if you have any questions about platforms, joining our Discord, and of course, both those exchanges will pay for your first month if you would like to join our Discord. Let's get on with the show. Getting rejected at the 50. The VIX is 0-day options apparently, or I don't trade options, but from listening to the options experts on TV, they say 0-day options are really driving the VIX crazy. It's not as predictable, not predictable, reliable as it used to be as an indicator. But let's look at the DXY. The dollar came down a little bit, so that means the euro probably went up, the euro dollar, so we'll check that pair out. But when you look at this, again, look at this rise. I wish if I took a chart of my Tinder profile with likes, I wish it looked like this. It does not. It's probably more chopped like this. But as long as we hold, guys, remember, we've been going over this for weeks on this channel, right? As we are rising, I said, if you flip the 618, which you got knocked down here, you flip the 618, you're going to get rejected by the 786. You come back down to the 618, you launch back up. If you flip the 786, where do you find resistance? Right at the 1 fib. You flip that, hold it as support. You got to flip the 1272, and that's what you're doing now. I still expect this to get the 106.040. Will we come back down if Powell is dovish? That's definitely a possibility, and you got to be prepared for a market rally then if Powell is dovish at this press conference on Wednesday. But ultimately, you want to hold 104.658 if you want to see the dollar continue to rise as I expect it to. Looking at yields, we were watching this last night in the Discord. The 5-year and 10-year took off and then sold off. Look at this. They went all the way up to 4.594. I remember I posted this in the room. I posted the charts and the candles were blue. And then all of a sudden, boom, they got bought up. So I don't know if any of you watch Gregory Mannarino, crazy guy. He just moved to Florida. He's like 3 hours from me. So I might have to get him on the case to see who's buying it all. Who's buying all the debt? I know he loves to say that. So, we got an upthrust right now. But again, this is at 2008 GFC levels where the yields are right now. Higher yields puts pressure on the markets. Let's look at 10 years. Same thing. Boom. Big upthrust. Overall, you're at 4.325. If this continues, if you get a hawkish pal, you may see some more yield movement to the upside, putting more pressure on the markets. What's the euro dollar doing with the DXY falling some? You're getting a nice little pop here. Remember, what was my prediction here? Coming down on 1.05604, and we've gotten really close so far. And again, just to rub salt in the wound, I shorted this up here and got stopped out by that one candle before this dump. It's been a massive forex trade for me. That's a big winner right there. You guys that trade forex know what I'm talking about. But I posted that in the room. The stop loss was too tight. Coulda, woulda, shoulda, right? Doesn't matter because I'm not in it. But this is where I expect it to come down to 1.05604. You'd see that in confluence with the DXY going up, and your immediate resistance is 1.0713. Let's look at Bitcoin because that's more interesting. Bitcoin, why is it behaving this way? I use Bitcoin as a barometer for liquidity in the marketplace, a barometer for risk in the marketplace. And of course, we have our 5-leg move here. I wanted to see Bitcoin come up to 28,989 or 30,237 before I get really interested in putting a short on this. Okay, against 618 and the 786. These are two levels I'm looking at here. You guys know this already. We've been over the shapes many times. You have what could end up being a head and shoulders pattern, lots of different patterns, right? You can probably even find some YouTubers that understand these things. There's so many, I don't want to get into it. There's so much bad TA on YouTube. It's ridiculous. I watched a couple of them this past weekend. I was literally laughing watching it. But this is what I'm looking at here. So when I look at this on a daily, we'll look at the 3-day chart, the bullish perspective as well, okay? But this is all just chop. And remember, your key levels here on Bitcoin, we got a lot of people in the Bitcoin space in our Discord. A lot of viewers watching this are big into crypto, and this is the mother for the market, right? But you've tested your 25K, your 24,930 several times now, okay? That's your key support level. We've been over this, and you're getting rejected right now at 382, 27,236. You got rejected after that at 28,009 right here. So the idea here is to flip this just like the DXY. Come up and test the 618, 28,989. If you can flip this, get daily closes above it, hold it, you're going to come back, maybe dip below it, back test this as support. This is key because if you flip the 618, your bias is to go to the 1 fib. And your last man standing between the two of you is the 786, which is the square root of 618, okay? And that's at 30,237. That's if this trend continues. We could rally if Powell is dovish. If Powell is perceived to say that we're done raising rates, you're going to see an equities rally. You'll see risk on, and you'll see that in crypto as well, which is why I'm showing you this, okay? And then the key level to flip is your 31,826. Conversely, if Powell is hawkish, if Powell talks about the need for higher for longer, we're getting a summary of economic projections at this presser as well from Powell. So I think the Fed has right now 100 basis points of cuts for 2024. If they remove one, if they remove two, this is the projections. If they remove three of those cuts, essentially it's even higher for longer. The market could react. So there's a lot of dynamic components to this. Okay, so just be aware of this. These are your key levels to the upside. The trend has not changed here, in my opinion, until you flip 28,989 and 30,237, because these are the key levels from Fibonacci patterns that you often will trade at, giving you these patterns such as head and shoulders or just a massive double top, okay? And if we look at this again, just to show you a bit, we're not in the process of breaking down at the moment, but when we get to that process of breaking down, that number where I have us going is still 12, 13K Bitcoin, okay? So let's go up here to our high, and I misclicked that. just barely misclicked it. So 12,160, 12,000 to 13K is my prediction for when this does roll down. The recession, going by the yield curve inversion, again, you heard Jeremy Grantham say this on the video I played that I showed you the edits from Grantham. Could it start in December? Why? Again, it's just mathematics with the yield curve inversion. It's going to happen either in December, the actual recession, where you'll see all the way to the first half of next year, because that is the normal range of where you're going to be in that recession, okay, for when it'll actually kick in and you'll see the pain in the market. The key thing is will the market front run that? Will the big money managers front run the recession, knowing, the smart ones anyways, which who knows how many of those there are? If it's like the general extrapolation of the US population, I'm guessing 20%, right? Pareto distribution. 80% are morons, they're lemmings, 20% actually know what's going on. And that would be, your super wealthy guys that talk openly about this stuff as well, that have zero career risk, like Grantham, Dalio, Scott Minerd before he passed away, Stan Druckenmiller before, well, he didn't pass away. I don't want to jinx him because I love Stan. Great guy. Let's look at this Bitcoin. This is the market geometry, bullish market scenario, right? So again, let me paint the picture like Bob Ross. If Powell is dovish, like the ECB, when Lagarde gave her speech, a lot of people perceive that to be they're done raising rates. So the markets went on a 2 or 3 day rally. Now they're giving a lot of it up today, but they went on a 2 or 3 day rally. We could see the same thing in our space. If Powell is perceived to be done raising rates, if he signals that at all, and he doesn't remove some of these rate cut projections for next year, you could see the markets take off. In which case, what? Market geometry, market symmetry, 63% up move, 22% down move, 58%, 59% up move, 20% down move. The geometric mean of these first two waves gives you a 61% move. Now, looking at Fibonacci expansion, where exactly does that land you? Not a coincidence. 2618, 39,791, which gives you a 61% up move. And that's how you get the 39,791 if those other conditions are met and you get euphoria in the market. Again, Powell hawkish. Powell talks about the need for higher for longer, removes the possibility of some rate cuts next year. You could see all this turn around quite easily and be on our way down to our 12, 13K target. Okay. So you got to keep these two ideas in your head at the same time. Something that a lot of people have difficulty doing. If X happens, then we could go up. If Y happens, then we could go down, right? You have to be aware. It's dynamic. I don't know what Powell's going to say. I don't know what Powell's going to do. I don't know what their summary of economic projections is going to be. So I'm trying to give you both situations and the levels to watch to be ready for both of them, okay? That's the key levels, guys. That is the bull case for market symmetry. And by the way, when you think about max pain, how much pain would it be for guys that have been super, super bearish if you did get this? If you got that final move before the recession really kicks in, before the market front runs the recession, trap all the degens, all the perma bulls. Look, I told you, Bitcoin laser eyes, 200K. That's where we're going. Halvings in whatever, 6 months, 9 months. That's where we're going. 200, 250K. And it would also cause a lot of pain to the bear. So it's a possibility. You got to keep it as a trader, keep an open mind. Got to look at the bull case, got to look at the bear case, and the likelihood of them playing out. And we're going to find out Wednesday when we see the market's reaction to Powell. Let's look at the Dow. The Dow, all the indices basically look like this, okay? So I'm not going to show you moving averages on all of them, but they're all above the 20 for support, below the 50. The Dow, the NASDAQ, I believe as well, and the S&P, okay? And the Russell's the worst. So, but those three are all behaving the same. So they're trapped. And I just want you guys to see some of the key shapes here that are developing. Let's go ahead and take these moving averages off. Now, the Dow is a price weighted index. So you have market cap weighted and you have price weighted. So the Dow's 30 stocks, you divide that by 30 and you get the average price. You sum them all together, divide it, and you get the average price. And that's how the Dow's weighted, right? So you have the NASDAQ, the S&P are market cap weighted. That's why you have, like in the NASDAQ, you have Apple being 11% of the index, right? So the Dow's weighted differently. What's the advantage? I don't know. I guess you could read about it. But I did think it was interesting because confluence-wise, they obviously move very closely together. But if we look at the bullish and bearish arguments for both, right? You're still in this channel, as you can see. I can extend those lines. You're still in this channel. And if you look at this, we had our double top, our 5-wave kick out to the downside. But what you've done is you've formed the W pattern, right? You still have your low, your higher low, and you're still at a higher low here, okay? So until this trend breaks, this goes for all the indices, you're in a recovery uptrend here until you break this trend down. Your first target would be, we'll go over this on the S&P as well, 34,280, and then your next pivot at 34K. You need to take out these pivots. If you take out this first pivot, you've made a smaller double top, which will project you down to this next pivot, most likely taking that out. That's your downtrend, guys, and you'd be sweeping this pivot as well, okay? You have to take out those pivots to be in this downtrend, making that double top. And of course, if you have that smaller double top, you have the larger double top as well, right? You got to be aware of these shapes. So look at this on the S&P. S&P is the same thing. If we look at this, we have our W pattern as well. You can see this here. There's multiple W patterns, just drawing it this way, the larger degree of this. I want to show you the projections because the projections are all the same too. Where could this go if we do get more bullish, if we get a dovish POW on Wednesday? Well, look at your Fibonacci, 4608. Where does that take you? Let me go ahead and expand this some for you guys. Where does that take you exactly? Right back to where you test it. You see that? 4608. What's the actual? This is 4609. This would be a 100% move here. Your round trip essentially from coming down and then coming back up. Okay. So that's if you get the bullish sentiment in the markets, you're going right back to your top area. And that's the same for the Dow, guys. So this is exactly what you'd be looking at in a bullish situation. Now, before that, you got some key resistances to flip, obviously 4,500. I posted in the room the day we got up to 45.17. I said, watch 45.17. Why did I say that? Because that's the 786. You see that? 45.17. It's exactly where we got to 45.20. And then we had this nice move down. But the structures are still the same. You still have your low. You still have your higher low. If you want to make this double top right here and you want to break it, you got to take out this pivot, 44.30. And then your last pivot underneath that, 43.36. If you take both those structures out, you are in a downtrend coming down to test the base of your channel, roughly 4,200. This is an ascending line. So you'd be looking at 4,200, 4,250, somewhere in that base, right? So that's the moves on the downside. Let's go ahead and look at this with Fibonacci as well for these actual levels. And we'll do it like this. Take this downtrend. You can see we found the 618 as support, 44.30. Again, that's what you have to break. The most commonly retraced 2 fib, 618, 44.30. And you look at your 1 fib, 43.62. Actually, it should be right here. And if we move it here, then you found the 46 for support, 44.41, dollar difference. But this is where you found your support. This is where you're bouncing off of right now. And your 1272 is at 42.80. And again, the 1618, guys, this is what we're talking about, 4200. This is what I would expect if we get a hawkish POW or the market reacts very hawkishly, very fearfully. It's not that I don't think the downturn is going to happen. I do think the downturn is going to happen. I'm just worried about the timeline because of how much time we have between now and December. We still have a couple of months. And I know how many degens are in the marketplace and they want to really run this thing up as high as they can. So you need to be prepared for both sides of the coin. This is still very bearish. Your key supply zone is going to be that 45.17, 45.35 to 45.50. That's the area we've been talking about. It's the area you got to and sold off again. Until you flip this, you're not coming up to 46.08. Okay, you're not doing that. And if you did, you'd have this great W pattern, great Fibonacci pattern, and that's where the 1618 would take you. It would be that 4608 area. So just be aware of everything that's happening here in the marketplace. Let's look at a couple other key things while I drink my tea. So if we look at the breadth in the market, how many SPX companies are above the 50? Less than a third. Less than 33% are above the 50. Less than half are above the 20. Okay. Again, bearish market action. Money flow is bearish as well on the daily time frame. Let's jump over to NASDAQ. NASDAQ zoomed out view here. You have on the weekly time frame key resistance area 15759, right? Multiple weekly candles up here rejected at your 1618. That's the key resistance area to keep in the back of your head as you look at the Nasdaq on this big recovery move back to the upside, right? So that's what I'm looking at is 15759, which is 500 points higher than we are now. Let's look at this on the daily because that's so far away when you look at it that way. If we look at this from a daily perspective, we draw these all the time, but just so you can see them, you double top, your breakdown. Your double bottom, your break up, your higher low structure, right? And then you have the double top structure, and you're technically basically at the neckline of this double top structure. You see this? You found support just off of it. So if we draw this, let's use Fibonacci here. Come up. We've found support at the 486, 15,183. If you start losing this pivot here, which is 15,139, so let's just say 15,183 with the fib. If you start closing below this, again, you're going to try to find support at 15K. If you don't find support at 15K, then you need to look at the base of your pivots around here, 14.7 to 14.9, this region here, right? That's what's going to happen with the NASDAQ with a hawkish pal or hawkish market reaction. Again, to the upside, you'd be looking at it from this way, from the upside as well. We could do this a couple different ways. We can take our high here from the rally. You can see where you failed right just about at the 786. And you can use these same levels looking at this pattern because you have multiple rejections here at 15,532. You see this? Just multiple, let's call it 15,550. Multiple rejections and a key rejection at 15,641. So you need to be aware of that to the upside as well. Okay. That's something that everybody needs to know what's happening with tech because it's basically 10 stocks that are responsible for the rally. So, and a lot of those stocks are in the NASDAQ, if not all of those stocks are in the NASDAQ. So just be aware of these levels. Let's look at the Russell. Russell looks like garbage. And this is small caps. This is a better measure of the broader economy. And if you look at the Russell, I mean, what's changed here? You have a lot of chop up and down. You have some intraday trading levels for sure. Where the Russell's in trouble is if it loses that 1818 area, okay? Your pivot base. You see this? You start coming down here and you close below this, you're coming back into the mid 1700s, 1740, 1750, somewhere in this range is where you'll be in the Russell, which would be a 100-point drop from where it is now. So that's key to watch. On the flip side, which Russell is really struggling here. The flip side, the Russell has to flip 1916 to make any type of momentum. You see this? It has to flip 1916, and then you have the 2000 high over here for the Russell to really compete with. But the Russell of all the indices looks the weakest. And again, that's a measure of the broader economy. They don't have price through power just like the big companies, okay? Apple can raise its cost of its phone another $100. A lot of smaller companies, debt-laden companies, consumer-driven companies that have low margins don't have the ability to do that. You're seeing a lot of suffering here in the Russell 2000. Looking at Apple, speak of the devil. Trying to find the support, guys. This 176 region is so key for Apple. If you start losing this, and really it's if you close below 169, you see this pump right here? You start closing below 169, you're giving that pump up, okay? Conversely, if the market wants to rally with Powell, you're coming back up and your next key level is 185 to watch. And then you'd be looking at your highs that you made on the rally of 196. And that's all going to depend on that trigger. Tesla's been playing out beautifully. If we look at our harmonic wave pattern, we hit our 1618, just gorgeous up here at 289, here at the C point on this wave structure. And of course, we have a couple different things going on here. As you guys know, we've talked about this. We're trading in a channel. Let's get rid of some of this noise. We're trading in a channel. Let's get rid of these waves. and you can see how clearly we're bouncing up and down off this channel. You have multiple patterns, as you will see on multiple assets that you trade, depending on time frame. Again, massive double top, right? So you have that pattern. So you got to be aware of that. And to do that, you can pull a fib retracement top to bottom here, and you can see 280 is a key level to watch, with 299 being taking out that high. If you can take out that high of 299, if the markets get euphoric and Tesla gets more euphoric, still the most highly traded stock among retail, then you can get the 1272 at 322 would be your next target. If this continues to fail and roll over, then you need to look at breaking your neckline down here at roughly 211, I think is basically that price. 211, 212 is where you want to break that neckline, and then Tesla would be giving up a lot. Tesla's PE right now, guys, is I think 77, somewhere thereabouts. I want you, Morgan Stanley came out with a $400 price target for Tesla. That's basically its all-time high. I want you guys to understand something when they do this. First of all, Morgan Stanley, they have a good relationship with Elon as well. Not that that necessarily matters, but I think it's important to realize that. So when Tesla was up here in the 400 region, its PE, its price to earnings, was over 1,300. 1,300. The market right now is at like 19. Tesla was at 1,300. So just keep that in mind for Tesla to get up there, the amount of euphoria and stimulus that was involved to do this, okay? And of course, I can get you there. I can get you up to that level quite easily based on wave projections. If you get harmonic expansion on my 5-wave series, there's a 289 level we got to on the 1618, you got to phi. And if you are going to expand upon phi and come up in this channel, look where the 2618 is. Coincidence, right? It's amazing. It's the market trades according to natural law, 405. Do I think that's likely? I don't think that's likely at all, guys. Is it likely you could come up and take out 289 with a dovish pal? That's definitely a possibility. Tesla can definitely move. And then I'll be watching that 322 area for my next failure towards the top of the channel. Because if you're taking these channel trades all along the way, you've been doing pretty good. French 40. And not a lot to see here. The market rallied based off of the ECB being perceived to be done raising rates. As you can see, your up thrust range here, roughly 74.02. Every time you get above it, you got a little bit above it here. This is a good range to potentially short, okay? Multiple. This is in your Wyckoff range here. It's a good area to potentially short. Right now, you're just in the middle again and chop, maybe smaller time frames at 72, 78. You could find something interesting. Watch that 74.02 and above, because this has provided excellent trading opportunities to catch these moves all the way to down to retesting your base. Same in the DAX, guys. DAX rallied up, hit the 46, 15,982. This area has a lot of supply. You can see it here, 15,916, 15,916, 15,9 once again, all right? Third time's a charm, and of course you sold off. So watch that area if you do come back up again. See if it holds as resistance, and you, of course, can trade it. Looking at gold. Gold has given us a nice pump. I'm so sick of seeing how bullish everybody is on gold, right? Everybody and their grandma, I'm bullish on gold. Well, I'm bullish on gold after it crashes, not before. And this is why we shorted it up here at 2055 and caught this big down move while they're all waiting for 3,000, 4,000, 5,000 gold, okay? Now, gold, just like the indices, because it's going to move with them, is putting in that nice higher low W pattern. You see this? So we're going to look at this and get some projections of where this could go. And if I look at this, 1933 is going to be key resistance, as well as 1941. Okay, 1933, 1941 on a move to the upside. If the markets do get more euphoric and flip these areas, you got to flip 1941. If you are able to flip it, get on top of the 1 fib. You get on top of the 1 fib, you're looking at 1953, 1967, 1985, which brings you back to these highs. Okay, and then you just be looking at potentially yet another large double topping out structure in this range if the markets get euphoric, right? If Powell signals that rate hikes may be done, you could see this move happen. So be aware of that. Always like to track gold because it does track so closely to the markets. I really like that area up here where it failed before, that high 1940s to low 1950s. See if it can get up there, guys, because again, always looking at the first structure that you have there is a clear double top structure, and it puts you right back, potentially struggling outside the channel, falling back into the channel. Looking at silver, silver keeps finding support in the same area, right? 22 spot 29. You see this? 22 spot 29. You get these nice moves up and down, up and down. Very defined trading range. It looks like one of the European indices right now, but very defined trading range here on silver. You basically throw this here, and you can see that you got a double top structure on top, broke down, fell apart, and then you just get clusters of up thrust. You see this? Clusters of up thrust. So 24 spot 63 is strong resistance for silver, and then strong support is 22 spot 29, and you're chopping around back and forth. Definitely some intraday trades in there to be had. Guys, hope you enjoyed the video. Man, this went long again. Hope you enjoyed the video. Like, subscribe. I will see everybody Thursday. Have a fantastic week, and look out for Pal. Look out for Pal on Wednesday, guys. We'll talk about Thursday. Take care.